Dirty dealings, corporate battles, consumer woes. This is Evening 5. Axiata Group subsidiary E.Co Group is seeking a buyer for its telecommunication tower business in Myanmar. After Nepal, Myanmar will be the next market that Axiata intends to exit in view of the worsening macroeconomic parameters and business conditions there. The group said it commenced an active program to identify buyers, but did not reveal details of the divestment plan, whether it is selling its effective stake in E.Co's Myanmar operation or that E.Co is disposing of its operation there. Its chairman, Tan Sri Shahriar Ritza Ritsuan, said tough, decisive actions were taken to enable the group to focus on assets that can create future value for shareholders. Axiata also released its latest financial results today. The group narrowed its net loss to 695.02 million ringgit in the fourth quarter of FY 2023 from 797.41 million ringgit in the third quarter of FY 2023 due to higher revenue, which rose by 1.7% to 5.79 billion ringgit. It declared a second interim dividend of 5 cents per share. On a year-on-year basis, Axiata's quarterly net loss comes against earnings of 9.95 billion ringgit previously, while revenue grew 7.2% from 5.4 billion ringgit in the fourth quarter of FY 2022. For the full year, it recorded a net loss of 2 billion ringgit versus a net profit of 9.75 billion ringgit in FY 2022. Top line rose 9.9% year-on-year to 22 billion ringgit. At the close, shares in Axiata fell 1.1% to 2 ringgit 76 cents, with a market capitalization of 25.33 billion ringgit. YTL Corp booked a six-fold increase in second quarter FY 2024 earnings, lifted by stellar results from the conglomerate's listed units, YTL Power International and Malayan Cement. Quarterly net profits surged to 589.21 million ringgit, while revenue increased by 14.2% to 7.53 billion ringgit. Its two biggest contributors were utilities through YTL Power and cement and building materials through Malayan Cement. The cement segment experienced higher volumes and stabilization in selling prices, moderating the impact of higher energy costs recorded by all divisions. Meanwhile, for the utilities segment, the power generation division recorded better margins and the strengthening of the Singapore dollar against the ringgit. For the first half of FY 2024, YTL Corp's net profit jumped eightfold to 1.1 billion ringgit, while revenue rose 15% to 15.1 billion ringgit. On its prospects, YTL Corp said it remains optimistic about the growth in cement demand, while its power segment is working towards the development of its 500-megawatt solar park in Kulai, Johor. Shares of YTL Corp slipped by 3.15% to 2 ringgit 15 cents. YTL Power shares closed 3.08% lower at 3 ringgit 78, and Malayan Cement fell 1.4% to 4 ringgit 83. The MACC is ready to charge Tan Sri Muhyiddin Yassin's son-in-law, Datuk Sri Muhammad Adlan Barhan, with a number of criminal breach of trust charges. Adlan is married to Datin Sri Nabilah Muhyiddin, the former Prime Minister's second child. According to a Bernama report, Chief Commissioner Tan Sri Azam Baki said the MACC has completed its probe into the case involving Muhammad Adlan and his lawyer Mansur Saad, but the two men cannot be located. The duo are allegedly involved in the misappropriation of millions of ringgit related to the registration, recruitment and biometric storage of foreign workers at a ministry. The MACC said records showed that Muhammad Adlan and Mansur left the country in May last year. In August, the anti-graft agency painted them as fugitives and urged them to return, but both denied being on the run and said the MACC was aware of their whereabouts. Local authorities have since submitted applications to Interpol to have both men placed on its red notice list. Azam said today that the MACC has sent in its investigation papers for prosecution in court. Sime Darby Plantation, the world's largest palm oil producer by acreage, said its net profit slumped by more than 64% in the fourth quarter of FY 2023 from a year earlier, weighed by lower average realised prices. Earnings tumbled to 562 million ringgit, while revenue shrank 6.9% year-on-year to 5.28 billion ringgit. Seasonally high stockpiles in key destination countries may impact short-term demand, along with geopolitical risks and slower global economic growth. But volatile weather conditions are likely to raise supply concerns, providing support for palm oil prices this year. It declared a final dividend of 6.05 cents per share. For FY 2023, earnings fell 25.2% to 1.86 billion ringgit, while revenue dropped 12.4% to 18.43 billion ringgit. Still, the company is optimistic that production growth will sustain in FY 2024 after rising 6% to 8.71 million tonnes in FY 2023, thanks to improved labour conditions and the rehabilitation of Malaysian upstream operations. Its shares ended the day 0.4% lower at 4 ringgit 50 cents, valuing it at 31.12 billion ringgit. Maxis said its fourth quarter FY 2023 net profit plunged by 76% from a year earlier, dragged by the tax settlement and penalties imposed by the Inland Revenue Board. Quarterly net profit was 56 million ringgit, compared with 233 million ringgit over the same period a year earlier. Maxis had paid 73 million ringgit to settle the tax assessments. Revenue for the quarter, however, rose 7.4% to 2.74 billion ringgit as the telco experienced growth across its consumer and enterprise businesses. For 2024, Maxis is guiding for a low single-digit increase in service revenue and for earnings before interest, taxes, depreciation and amortization to remain relatively unchanged. It aims to keep capital expenditure under 1 billion ringgit. The telco declared an interim dividend of 4 cents per share. For the full year, net profit declined 13.8% to 993 million ringgit, while revenue improved by 4% to 10.18 billion ringgit. Shares in Maxis traded 0.5% higher at 3 ringgit 81 cents, valuing the company at 29.84 billion ringgit.